Pretty quiet down in Sydney town.
Never quiet in Sydney town.
COVID quiet. How
Uh,
you seeing things?
and any concern about the Aussie Kiwi?
Yeah, look, in terms of the Kiwis talking negative rates.
Yeah, they are trying to drive the currency down, and they're doing it because it crosses.
Man, I mean, you know it more than anyone. I mean, these guys, New Zealand's pretty aggressive. They don't muck around at on the central bank side. So
Yeah.
it, yeah. I mean, what are you seeing there?
Well, I'm just we're over 110. The Aussies can be none too happy about this. They've been trying to contain this between I think 104 and 107. Now since the Kiwi announced that they were going to enhance their QE. I know now they're talking possibly negative rates or buying foreign assets. So, and what if they bought Aussie assets? I think the Aussies would go absolutely.
Yeah,
What's bonker? What's my best Aussie word? Bonkers.
pissed off. Well, I mean, let's just quickly looking at now. I mean, Jab, we're up against the 764, aren't we? So the recent range. I don't know. I mean, I don't have a good feel as to what Lowe's going to do about it. But I think it's getting obviously dragged into the US dollar overall, and it's not going to be very helpful. I mean, it's just a huge problem down here. It just drags the government in further, doesn't it?
Yeah, yeah, I think that's right. But where people would usually read this as a positive for Asia, and of course with China, because strong Aussie, the Aussies are much more diverse in their commodity exports than the Kiwi.
Yeah.
But now it's a monetary phenomenon more than anything, and this is what's plaguing the markets all over the world, as far as I'm concerned, with the different central banks. I did a piece. I don't know whether you saw, you heard, or you listened to that with Richard Duncan. Do you know him?
With who? Sorry.
Richard Duncan.
No, I don't know him. No, I listened to it.
Right. Judd posted it, but I did. It was actually a pretty good piece. We covered the global macro realm. Now, of course, we got the bonds. Last week we saw a pretty good steepening. I forgot what else do we want to talk to him. Judd, you were supposed to make notes.
I got notes. Well, at some point we want to talk to you about knockout options.
Oh,
and,
yeah.
And then we also had a question about the VIX.
Yeah, that wasn't for me. So.
Oh, that was a short-term deal. Somebody was just pointing out that there was, it's 7 o'clock in the morning.
Oh, that's right.
Yeah.
That's right.
You were getting these VIX spikes, and we were just kind of curious as to whether you just thought it was all algorithmic trading.
Yeah, I mean, personally on the currency, I mean, I agree with you entirely. I think there's different central banks. If you go and look at Aussie NOC, which I've been short, and that's had a nice, technically, and also just the sheer size of that sovereign wealth fund and what they can do differently.
Oh, yeah.
In Norway relative to the rest of the world. I don't know. So I agree with you in terms of looking at what the Aussie now is going to start causing major problems, particularly if this dollar continues. At the moment, I'm not seeing any signs that it's not going to. And so the Aussie knock, I think it's just yet again expressing how different the central banks are all going to play it. I don't really know the domestic central bank and government thing, other than basically both of them have to get together, like the Fed has with the Treasury.
Let's see something. You know what? It may. If you look at the Aussie, the Aussie Canada, Andrew, which picks up this theme. Yeah, you still get a little more extra yield in Australia, but the Aussie Canada has broken down. Let's see if it can stay below the 200-week moving average.
Yep.
Now the daily, the 200 day is far different than the 200 week is, but I think that considering huge bounces, this it, you know, I don't know. I
You
don't
look,
know, but it's worth paying attention to.
It looks
I
like
think,
it's caught here between the moving averages, guys. It's 94.85 to 94.5, which is a 50-day, or 94.60. That area down there, well, right now it's right up into all the momentum resistance.
yeah,
But if it starts weakening again back under the 50-day, then I think it just rolls over again.
yeah, it'll
yeah.
be.
I mean, are you looking at the Aussie generally, particularly against the Kiwi, that you think the Aussies have to do something, or they're caught here and the Aussie and Kiwi can run? Aussie,
How far will they let this run before they, you know,
yeah,
they have mechanisms to counter it too. You know, it's not like everybody's catching on. And again, it's not necessarily a trade issue. Well, maybe for the Australians, they just don't like that. I know for it to get too high. I mean, if we went, well, I mean, we could go back to 112, 113. I would be shocked if that was the case. But interest rate, let's see, the 10-year yield in New Zealand is 67 basis point. Australia is 89. So they do get a little bit more, although the Kiwis a little bit less in the U.S. Canada is at 60 basis point. I mean, so those are just, you know, just taking a look at the world. And, you know, again, I think that this yen is, you know, is critical here for the FX markets. And I think it's one of the pieces that people are missing. And it is interesting that the yen did get a bid today. Now, this was the area we were looking at, Judd, I think the other day for resistance.
And it's right there again, too, in dollar
Yeah.
yen.
Yeah. So be patient here. But the yen is up with the equity, with the SPOOs up, with
good point.
with other factors. So, and the GDP number, of course, in Japan last night for the second quarter was weak. It initially caused the yen not to really do anything. But it was interesting that Europe took the yen, was the one who bid the yen up this morning. That, you know, that's when the rally took place. Whatever rally we've got, I mean, it's not like anything of critical levels. We're still stuck in this enormous range. But oh, Andrew, you weren't on. But when I looked at the Japan yields in real yield terms, may be the best in the world. God, it's hard to say that, but it's on a real yield basis because they're probably still net on net a little positive because of the disinflation scenario continues in Japan. So, I mean, we know that even when Warren Buffett comes out, he's 4 years late as far as I'm concerned, but he is now all of a sudden concerned about real yields, which we keep stressing here.
Well, interestingly enough, when you highlight that yen, which I agree with, as much as gold had a couple of bad days last week, it held the high weekly close, and you go and pull up a gold yen chart, and at least on my Bloomberg, Judd, I'm not sure if you can do it on CQG.
Yeah, hang on a second, I got it on another page.
I had last month closing above the 1980 high in gold yen. It was the last. For me, the last gold cost to beat either 2012 high. In this case, gold China did it about 6 weeks ago. Gold yen did it. Now, just yet again, I mean, I agree with you on Buffett. I mean, good luck to him. He's coming in when he has, but I mean, it's going to be bumpier ride now with gold up here because everyone knows about it, but you just got to make sure you know the seasonality and the levels on the dips.
Oh yeah, there's no question. And you listen, the currencies may play a little catch up here.
They could, absolutely. And the gold need, absolutely.
You
But
know,
I guess looking at that chart, it still projects a lot higher gold yen. I'm not saying
yeah.
currencies play a role. So it just looks at the overall picture. But I agree with you. The yen's interesting today on the basis that it's stronger against the S&P being up.
I mean, this spread off of today's pattern should go back to 192, 194 and change.
Yeah. But do you have the data back to 1980?
Sure. That I do.
That
Hold on. Let me just change the input.
not that it's going to help us with today's trading, but it will just give you this.
Well, let's take a good look at it, you know.
I mean, on the Aussie, I'm not hearing anything other than, they're a little caught here.
All right. Well, there you go. You want it. This is dollar yen. You want it in futures?
So you got the gold yen. Bloomberg doesn't have any. It doesn't look like that at all.
Yeah, I'm using an active daily, so it's an active annual.
Yeah, I've got the 1970. Oh, hang on, it goes backwards. The high I'm talking about is 1979. You got 1979? You have, yeah. I can email you what Bloomberg has.
Okay.
We may have to double check that. I'll definitely double check it. It doesn't look like there's anything wrong with Bloomberg's data, but I'm not going to vouch.
Here, let me just articulate it a different way.
I'm not going to vouch for it though. It is interesting though, Ira, if this does continue, then you want to pay attention to the next RBA meeting.
I'm sorry, I didn't hear that.
It is interesting you saying this because if this does continue, at least that stays here, you do want to pay attention to the next RBA meeting.
Okay.
Yeah.
Here it is, Andrew. That's in yen futures.
Right.
Is that what you're looking at?
Yeah.
Okay.
Whoa.
So that's pit session to pit session futures.
We had a new high close last month. Yeah.
Right.
Again, it's just, I'm just looking at our big time, and if you hold a guy miners and stuff, that it does project a lot higher.
Yeah, I mean, look at the swing this thing's doing.
Sorry?
I mean, look at the swing that's doing.
It's massive.
Yeah, huge.
Huge. Now, again, caution to the winds. It's come a long way too. So to Ira's point, the currencies could take over for a while to take some heat out of the gold price. But it does show me, gold China did the same thing about 6 weeks ago, made new high. I think gold yen's the last one to have done it. Gold dollar did it, of course, a couple of weeks ago. Gold yen, gold China. I think the VIX question, I wasn't totally unsure of the question, but I mean,
So what they were seeing was at 7 o'clock in the morning, and we were just kind of musing as to whether everybody was just turning on their computers then, because you were getting a VIX spike in the first 5 minutes of trading.
That's all. I mean, it's all algos. That's how a lot of those guys set their days. It's just that first period looking for the open high close. I mean, what I personally use it for is just seeing how the rate of change happens. And so the VIX and the Russell and the SPOOs, they've all come, NASDAQ, they're all comfortably under the levels that I normally get concerned about in terms of if things are getting too hot. So
So
You're
this
seeing
is
no-
what they were looking at right here. These 5 minutes at 7 o'clock in the morning, Chicago time,
Yeah.
where you get these big spikes and then you get moves in the gold, the S&Ps, and they all kind of, have a wiggle. So the guys that are trading, the really short-term guys we're kind of keying off of that for a trade.
Yeah. The only thing I've got this week is, other than obviously what I was saying on the end, that 19th to 22nd, I've got some pretty concerning seasonality with some risks. So I'm interested to see. I'm not seeing any signs of it as to why I'd be worried, but I'll be keeping an eye on any vol shift to the top side. The one that does tend to work very well for the next 6 weeks, starting in this week, is gold against stocks. Gold in favour of stocks.
Yeah, and you have a Ganday on the 21st, so it makes sense that if you're going to get a change, that's when you're going to get it.
Like it's in fact it's Wednesday through Friday. Yeah. I'll leave you to it.
Okay. We have nothing sanctioned here. And the next time Bosco or somebody else comes in and says somebody asks about something,
Yeah.
we gotta find out what they know more than what we know. Because Friday or Thursday, was it? Or Friday, that guy came in and said he was asking Bosco about the corn, and then corn hadn't done anything, and then it just put in an ORH day and took off. So somebody remind me to, ask what they know that we don't. Because somebody always knows more.